Hi, my name is Reggie Jackson, and I'm the creator of AllKnownBusinessCosts.com, the most innovative business costing and management process in America. This process was created to keep things very simple, letting you measure your business success based on the information that you know. First, I want to briefly discuss what business is. Typically, when an individual thinks about a business, they think about the product or service that's being produced or provided. When in actuality, a business is the money that you put at risk, meaning cash, loans, credit cards, etc., in order to provide that service or produce that product, with the end result being generating a profit so that you're getting a return on your investment. The problem has been for many business owners is understanding expenses or costs to then be able to easily manage the success of their business. Well, this process makes this easier than ever. I created the simplified measurement method for measuring the success of your business. It basically has three components. It has the revenues, it has the all known business costs that can now calculate 95 to 98% of all of your known business costs before the first day of the month. Then we have unexpected or unknown expenses. Well, these unexpected or unknown expenses are items that will happen, but you don't know the month that they may occur in. So to keep this process simple, your business success is measured by having your revenues minus your all known business cost, and this number has to equate to a minimum profit. And that minimum profit is necessary and required so that you know you have a profit cushion to absorb unexpected or unknown expenses. So we're going to go ahead and give you a little demo using a simple calendar format. Okay, the first thing we're going to do is look at a standard calendar, and this calendar is to measure the number of working days. For January, there are 21 working days in the month. Therefore, there are 21 days that you have to generate your revenue. The next calendar represents the cost per day. So if we know that we have 21 days working days in the month, we're going to allocate our cost over this 21-day period to come up with our cost per day. The next part we're going to look at is our minimum profit. There is a method to determining this minimum profit. Now, for our example, I'm just showing to get a $12,000 yearly profit that for the month of January, then we need $1,000 per month. That this shows us how much of the minimum profit that we need per month. It's important to understand the minimum profit because your goal is not to break even. Your goal is to have a minimum profit number while trying to maximize the profits for your business. And last, we have our cost plus minimum profit, and this becomes your management tool. This is what makes this process unique, that when you have your cost plus the minimum profit number, now every day you can measure the success of your business by keeping track of your total revenues and having it subtract from your cost plus your minimum profit to measure your business success. And you can see that the $1,000 minimum is coming in here as the amount above. So as we add in our cost number, this number obviously will increase for that purpose. Okay, so we're going to actually go through and put some cost numbers into the spreadsheet so that you can see how all this gets updated and how the process works. Okay, we're back at the starting page, and again, this hopefully is a little better to understand. For every business, you have your revenues. We have what you can calculate for your business as your all-known business cost, which represents 95 to 98% of your cost. We will then have our profit number, and this being our anticipated minimum profit. And that minimum profit is there to absorb any unexpected or unknown expenses so that your business has an overall profit at the end of the year. So let's get started. Okay, we're at the salaried employee entry screen. So what I'm going to do for our example is I'm going to put in owner. I'm going to put in an annual salary for our demo of $35,000. Now typically most businesses, when they sit to calculate their cost, they'll take that $35,000 divided by 12 and come up with $2,916 that they then will calculate for their expense. With the all-known business costs, the important thing to understand is that your expense to the business is not just the $35,000. It's going to be the $35,000 plus FICA tax Medicare tax, and depending on the size of your business and number of employees, FUTA tax and SUTA tax. I'm based in the state of Georgia here, so Georgia has a 2.7% initial or maximum SUTA rate, so I have that in for the example. But obviously, it'll be whatever your actual state unemployment rate is for your particular state. Also, what calculation here does is instead of doing a flat annual salary divided by 12 in terms of the number of months, this takes that salary and divides it by the number of working days. Because at the end of the day, it's the days that you have or your employees have to be productive in terms of generating revenue that you want to have the expense allocated. So, whereas a simple calculation of 35,000 divided by 12 will come to 2,916 per month. If you did that, you will see how, if you're basing that number in terms of what your cost should be for providing your services, you will see that you will be understating what your true expenses or costs are for this salary item alone if we were to isolate this one expense. So that with the all known business cost, you're picking up the gross wages plus the applicable payroll taxes to get to 3204. So once again, if we were to isolate this expense, this would mean that to break even, you would have to charge at least $3,205 for the month to cover your all known business costs. Now, to keep this process simple, we're just going to use this one expense and follow through on our previous calendar now that we have the 95 to 98% of our all known business costs covered, how this now plays out. So I'm going to go back now to our calendar so you can see how this information flowed over. And remember, we have 3204 as our actual total expense. Okay, we're back to our calendars. Again, these calendars are used just for the purpose of demoing the process. So here's our cost per month. We're isolating just the one expense, so 3204. And again, this is our number of working days that we had to do the calculation. So now if we come down and look at our cost per day, the 3204 basically comes to 152.61 per day that we would need to cover, and this gives you a weekly and then a monthly recap of how we get to that total. Now obviously for every business, whatever this cost number may be does not mean you have to get that amount every day, but it just means that over the cumulative course of a month, that in total you have to get enough revenues to cover the expenses. Now if you recall, we had the minimum profit of $1,000 for the month, okay, and that was just for a $12,000 a year profit for the unknown or unexpected expenses. So that adds an additional $47.62. So if we come up, we have $152.61, $47.62. Okay, here we can see that with our cost plus minimum profit, $42.05 is the amount that we have to charge at a minimum that we would need to charge or bill in revenue for the month to give us the profit margin to cover all of our costs and to give us a $1,000 profit margin to absorb any unknown or unexpected expenses. And now this is where the management part gets done. Just real quick, we know with 100% certainty what our cost per day is for the expenses that we have. We know what we need as a minimum profit. So now we know that this is the amount that's needed to cover that cost plus minimum profit. So as you conduct your business during the day, at the end of each day, all you have to do is come in and enter in what was your total billing. And I'm going to keep these numbers relatively close just for the purpose of the demonstration here. But if we see that, and I'm going to just put in here that we came up a little short that day. Okay, but we can see, and you can easily measure that, well, with $1,200 for the first week, we have $800 for the cost plus minimum profit for that week, and therefore we are on pace for $400, or we have $400 of profit for that week. Now, again, this is cost per day, so you still can see with absolute certainty how much is needed for the remaining weeks to cover that cost amount. So again, imagine being able to manage your business when you know your revenues and you can calculate at 100%. You know your cost at 95 to 98%. For the purpose of our example, it's 100%. You calculate a minimum profit. Again, this is not a made up number, but a number that is calculated so that you know that at a minimum, if your business is on target, you need to get this amount in profits so that you know that your business is quote unquote successful. Okay. And then lastly, being able to manage your business based on this simple calculation. So now you can concentrate on the product that you're developing or the service you're providing because you now have absolute certainty in terms of what your costs are and what revenues are needed. And your goal is to maximize. So if you come in and your revenues are much higher, that is certainly not a problem. That is your goal. But what it does is it allows you to now measure with great certainty the true success. That is your business profitable? For the purpose of the demonstration, I used one expense and cost analysis just so you can see how the information flows in terms of calculating your all known business cost and then how it turns into a management tool. Now I just want to give you a listing of the expenses because this is the most critical part to understand that this is all known business cost, i.e. all the costs that you know associated with your business is in this calculation. So I'm going to provide a list of those expenses so that you can see how this includes all of your known business costs.